In a recent video, I showed you how you can prevent yourself from blowing your prop firm accounts. This video is going to be a part 2 to that. So if you have not watched that video, be sure to watch it. That way you can follow along with everything that I've been saying. So I'm going to recap some of the things in the previous video, but there is some important topics in this one that I want to cover. But first, if you like this kind of content, smash that like button. Take a second out of your day, hit that like button. It's a free way for the channel. Tells YouTube, hey, I kind of like this guy. I like the content he's putting out. I want to see more. So smash that like button. And also subscribe to the channel, get more daily content, because we're putting out content all the time, every single week, almost every other day at this point. We are putting out content. So subscribe to the channel, get more content, because we are going to be ramping it up. Let's get into the video. So in the last video, I pulled up my chart and I gave some examples on what you can do to prevent yourself from blowing your prop firm account. And that was switching from minis to micros. And I gave a live example on how you could take a trade using micros and still have $1,000 day while only risking around $300. Now, I did add to my position and I got a lot of comments saying, hey, well, you added your position, you're no longer risking $300. Well, I did fail to mention that I would have moved my stop. And so with that said, I would have moved my stop to break even. Just going to cover that now. But anyways, jumping into the chart here, I want to go over something else that's very, very important. All right. Now, in the previous video, I went over an example and I showed you guys how to still make a lot of money trading micros. Well, here's what we're going to do. I'm going to show you another example on what you should not do, right? Now, let's just say, like, and today was a wild day in the market, by the way. The VIX was wild. Everybody's panicking. It's just kind of a wild day in the market. It's a good day to stay out of it. Tomorrow might be just as crazy. But let's just say that you were going to enter the market. I'm going to show you what not to do, all right? Let's just say you're going to enter the market at we're going to call it 50, right? We're going to call it 950 here, right? We're going to say this is our entry. Entry 950. Wow. That did not work out. All right. Let's do 950 again. There we go. Bang. All right. Let's just say we're going to enter at 950. Guys, 1-to-1 trades are not going to work. And now I'm just going to say we're entering one micro contract. It is $2 a point. So keep that in mind for this example that I'm going over. 1-to-1 trades do not work. Right. So let's just say that you're going to have a stop loss at the bottom down here. Let's just say we're going to call it 900 because that's pretty much the bottom of this support area. So let's just say that this is our stop loss. Okay. Now, this is a 50-point stop loss. Now, we could target 50 points to the upside. We got it at 950. Means we're aiming for 18,000, right? So we're going to call this 18,000 right here. Okay. So let's just say that we're aiming for 18,000. This is our take profit. What's the big problem with this? All right. If we're constantly taking trades that are 1-to-1 where we have a 50-point stop loss and a 50-point take profit, guys, that means you have to be right more than 50% of the time. It is actually, now you can have above a 50% win rate. A lot of traders do, but it is also very hard to achieve that and be consistently above a 50% win rate. 50% win rate is still actually technically really good. Okay. You have to be more than 50%. You got to have like a 60 to 70% win rate to even be profitable and making money. You need to be right more than 50% of the time. And the overall goal of being in a prop firm is to make sure that you have longevity, that you're keeping the account, that you're not just in it for 3 to 6, 9, 12 months, whatever, that you can actually have longevity in these accounts and actually build up the capital for you to then trade with, right? And then to eventually scale your position sizing up. But if you're constantly having 1-to-1 trades, you're going to go through a period of time to where you are going to have a losing streak. And then that losing streak is going to continue to wipe out and wipe out and wipe out all the other times that you won these 1-to-1 trades. And then there might be times where you go on tilt and be like, nah, I ain't accepting this loss. And then you wipe out a good 3 months worth of your profits in like a week. Okay. So these 1-to-1 trades, guys, it doesn't work. It can work for a period of time. I'm not saying it doesn't work, period. I'm saying it will work for a period of time. But eventually you're going to hit a losing streak that where this 1-to-1 trading model isn't going to work that great. You guys should be aiming for at least 2R, right? Have 2R to be give yourself some wiggle room to be able to lose and it be okay, right? You know, you could have a 2R trade where it takes, you know, one trade to wipe out two losses instead of one loss to wipe out two winning trades, right? You don't want that. You don't want one loss to be able to wipe out two trades. You want one winning trade to be able to wipe out two losses, okay? And so when you have that 2R trade, that's where you start to get profitable and where you start to get consistent, because it's okay if you lose, right? You're not going to lose, you know, every single trade all the time, right? You're going to have some winners, and those winners are what's going to help offset those times that you lose. So that's why this 1-to-1 model, it does work. It has worked for some people, right? But in my opinion, right, and again, this is all my opinion, not financial advice, these 1-to-1 trades will not have or give you longevity in your account. So that's why I really do think and fully believe that those 2R trades and those 3R trades are what you should be aiming for in trading small with trading micros, because that's going to help you have longevity, right? Now, if we're in this example here, right, let's just keep our entry the same, our stop loss the same. Let's aim for, let's just say we take it up to 18,050, right? We take it to 18,050. Now we have a 2R trade, right? We have a 2R trade. We can tolerate risking, you know, this 50 points, because now we're aiming for 100 points, right? And so if we won this trade, we can win this trade and lose the next two, and we're break even on the day. Okay, so that's why you should always be aiming for that 2R or 3R. Again, this is all personal opinion. Some people make it work with 1R trades. I personally don't think they're the best. You can give them a try, see if they work for you consistently. Just keep in mind that you need to be right at least 60%, 70% of the time for you to even make money doing 1R trades. Okay. Now, in the previous video, I gave you an example to where I entered the market, I had a stop loss, right? And then I added to my position. So let's just say that we hit this, what was it, 18,000 mark, right? We broke above 18,000. So we're going to look to add, right? Let's take this, let's take this here. All right. And again, if you haven't watched the previous video, be sure to go watch that, because this will make sense to you once you've watched that video. Let's just say we're going to add at 1850, right? So we're going to do this. We're going to add at, we're going to call it 18,050. Okay. So now let's just say we're in 2 micro contracts, where we started at 1 micro contracts. Now we're at 2, right? I'm not going to keep my stop loss where it's at, because now I'm risking more than what my original risk was. And I don't want to wipe out my previous day profits, my past 2 days profits. I don't want to do that. So typically when I add, and this is just me, not everybody does this. When I add to my position, I'm going to move my stop loss up to where my average point or average order price is after adding, wherever that may be. I'm not going to crunch the numbers here, but let's just say that my average entry now is, let's say about, I probably would be around right in here at the first take profit, right? Where we originally took profit. So my stop loss would be then break even wherever my average order price is. That way, if it comes back down, it stops me out for break even. I didn't really lose anything. That's how I trade. I'm not saying that's how you need to trade, but I'm telling you that this is how I manage my risk. And if I get stopped out for break even, I get stopped out for break even. Who cares? I didn't lose money. Break even trades are still winning trades, right? But the overall purpose of this and me showing you guys this is how you can keep longevity in your trading account, because at the end of the day, the only thing that matters is how long can you stay in a trading account and build that capital for you to then size up and start making even more money with that account, right? In my previous video, I went over, how many times you had to be wrong, right? Let's just say you have a $150,000 account and your stop loss is $300. You have to be wrong 15 times because your max drawdown on a $150,000 account is $4,500, right? And when you have a $300 stop loss, you have to be wrong literally 15 times. That's when you'd blow the account. If you're wrong 15 times, you will blow the account. But that 15 times is giving you so many opportunities to actually be right and continue to grow that account. It's all about longevity. It's all about keeping yourself into the account as long as possible. There's no rush. The market's going to be here forever. I saw a comment in one of my previous videos saying you're not going to be around forever. No, you're not. But the market is, and you have all the time in the world. It's all about patience, right? Being disciplined, finding the setups that make sense for you, and being patient and waiting for those setups to show themselves, right? And then taking the appropriate sizing in your account to help you keep the account longer. Guys, you have $4,500 in drawdown. Why are you trading minis, right? Minis do not make sense for a $4,500 drawdown. That's not realistic trading, right? You'll see all of these people trading minis, but minis are not realistic when it comes to a $4,500 drawdown, okay? Trade micros, build a buffer, get the account to $10,000, and then maybe trade a mini, right? One mini, okay? Don't just go crazy on minis, but get the account at $10,000 and then maybe size up to a mini and see how you do. If you feel like you're trading too big, size back down to micros, right? It's all about longevity, guys. Anyways, this is a part 2 of the previous video. I hope you guys enjoyed this kind of content. If you did, be sure to smash that like button, subscribe to the channel, get more daily content. And guys, I'm live every single day. I am taking a break from trading live right now while I focus on a couple different things, but I will be back trading live here in a couple weeks. So if you want to see that, subscribe to the channel, get more daily content and those lives, and I will see you in the next video. Cheers.